Welcome back, value investors. In this video, I'm going to be looking at Apple. This is a very well-known company with a very high market cap for good reason. They've been making great products for a long time. People just love their products. And their stock price has been coming down in price. So I'd like to take a look at my valuation of Apple, update all my numbers based on their most current financial statements, and see if it's a good buy for my portfolio. Let's get into Apple. I'm going to look at Apple from three different perspectives. First, it's all about the company. Do I think the business is good? Do I think the industry is good? And do I think the company is being operated well and the company overall is performing well? Next, I'm going to look at the balance sheet and see if the balance sheet's in really good health. One of the signals is debt less than 3 times EBITDA? Is there a discount on the stock? I'm a value investor, so I'm looking to get a stock at a good price. And based on what I find out, I'm going to either buy or stay away from the Apple stock. Some companies need very little introduction. Just about everybody knows what Apple does. They create products, principally their iPhone. Their iPhone is in millions of hands, used every single day by millions of people. They started in the PC business where they developed really good PCs, and their Mac still continues to be a really good product. They also have iPads, watches. A new product is the Vision Pro, which is interesting. They have AirPods that help people with their connecting to their phones and using them hands free. And overall, their products are really well designed and really appreciated by their customers. The one thing that Apple does do is they don't try to do all things for everyone. They focus on a certain product set and really try to master it. Their designing has really, if to say they've won awards is an understatement. Apple almost has a philosophy that other companies really want to emulate because they've done so well over so many years. Let's take a look at the fundamentals of Apple. It is a very large cap company at $2.77 trillion in market cap. This is a company that famously, Warren Buffett's a big stockholder in Apple. He's made a lot of money on the company. If you look at their revenue, it's almost $400 billion in annual revenue. And that's pretty impressive. You're in essence at a market cap of 2.7 trillion. Investors are paying 7 times revenue to get to that market cap. Their net income is really impressive at $100 billion. And their PE, their forward PE is quite practical at 25, considering that you're buying an excellent company and the PE of the S&P is around 25, 26 anyway. They have a lot of analysts covering Apple, as you might imagine. And overall, there's a buy rating on the company. They tend to buy back shares, which is one thing that is really liked by investors. So the number of shares outstanding continue to go down over time. Having said that, Apple has pulled back as recently as 2023. It pulled back down to 170, and it's pulling back down to about 170 now, which is interesting. I think investors are worried that the company's not growing fast enough. And I'll show in the next slide that the revenue really isn't growing, which is a concern. They are generating a lot of free cash and they are growing their free cash flows. But overall, in the marketplace where investors are looking at certain companies like Nvidia as an example, just growing so darn fast, I think people are worried about Apple because they can't show that super impressive growth rate that other companies are currently showing their investors. Now, this may be an opportunity to buy Apple at a low price, or it may be a sign that this company was overvalued to begin with. And that is the investor's dilemma. Which one is it? Well, making decisions for yourself is important. I'm going to make my decision on Apple based on how I perceive the company, my valuation, and where I think the company is going to go from this point. I'm going to value Apple based on two methods. First, I'm going to value the company based on free cash flows and discounting those free cash flows. And then second, I'm going to value the company based on earnings per share. Let's start with free cash flows. The free cash flows that I expect in 2024 are 2023 numbers grown at 4%, which would be $103 billion of free cash that they produce. And I'm going to grow those free cash flows by 4% in the first 4 years. And then terminal value is also at a 4% growth rate. The reason I come up with 4% is the company's grown free cash flows in the last 4 years by 4%. They haven't grown revenues at all. They're at 0%, but they have been growing free cash. I'm going to discount those free cash flows by 7.5%. And in today's value, all those cash flows are of a value of $2.7 trillion. I'm going to add the cash on the balance sheet and take away debt to get to an equity value in the company. The market cap of the company is $2.77 trillion dollars. And based on the valuation that I came up with in their current market cap, the company is being sold at a premium of 2% if you look at free cash flows. The earnings per share look good. They have a good earnings per share expected this year, and I give them a PE of 30. They're currently trading at 25, but I think they deserve a 30 because the S&P is really trading at 26. And this is a premium company. So I would rather put a higher PE on Apple. Based on those factors in a 4% growth rate, using my valuation method for earnings per share, I get to a per share price of $194.69. Compared to the current stock price, based on earnings per share, the company is discounted by 11%. I blend the two, putting more weight on the cash flow method. I get a 3% discount on Apple stock currently. Now, let me make a decision on whether I should buy, hold, or sell Apple stock. So, first, I think the company is terrific. And I think their business is still strong. They haven't been growing, so they have to figure out how to grow. Maybe creating an additional product line, maybe even acquiring a company. They certainly have the cash and the balance sheet to do it. I think the management team is excellent and the industry is very good. Overall, Apple hasn't even played in the AI space, so that could be another opportunity for them. The debt is not a big problem on their balance sheet. They have a very strong balance sheet. They have a very high credit rating. They offer a very small discount. So I think Apple is a buy in my portfolio on pullbacks. Their stock has been going down over time, which is interesting. And if it continues to pull back, I am going to buy shares in Apple. That's my analysis on Apple. It's interesting how the same company could be trading very differently from a stock price perspective in a short period of time. And it's good to see that as the stock falls, I can analyze the company and see if it's a good time to buy a company. And I'll be sitting ready to buy Apple stock should it continue to go down, especially down to about 170 a share. I appreciate you watching the video. I hope you found it interesting. Good luck investing in 2024.